today we'll be running over 5 ways any small business can pay less taxes. Today we'll be running over 2 of those ways. Next week, which is next week, Thursday, the 7th of December, we'll be doing the other 2. And then the last week, we'll be doing the last one, as well as a summary of what we had discussed. Okay. So just a brief of an agenda for today. We'll be covering some housekeeping, introductions, and then I'll jump into the 2 ways you can save on your taxes, the first way and the second way. And then there'll be time for some Q&A. And then there's a gift if you stay on until the end. So please do stay until the end. Trust me, it's worth it. Okay. So this workshop/webinar will be recorded and the slide deck will be provided upon your request. So please just send me a message if you need us to send you a recording with your email address, name, surname, and your email address, and then we'll send through the recording for you. Because we have to take into account load shedding, network issues. So yeah, this is definitely recorded and will be shared upon your request. Then you can ask questions after each tax saving tip that I'm going to share with you. And then just to say this again, this is a 3-part webinar. Today we'll be covering 2 of the ways your company can pay less tax. Next week we'll be covering the other 2. And then the 3rd week we'll be covering 1 more way, as well as a summary of the other 4. Okay. Just a brief about myself. So I'm Pamela Nzumo from Nzumo Consulting. I consider myself a risk taker as well as a problem solver. I'm a registered accountant with SAICA as well as a SARS registered tax practitioner. And in our company, what we do is we help SMEs pay little to no taxes legally, of course. But we also do provide bookkeeping as well as payroll, as well as advisory business services. So I'm a mom of 4. Yes, weekends can be quite hectic. My why did I start running this accounting firm? It was purely to help small businesses who are specialists at what they do, because you know, we've got engineers here, we've got architects, we've got so many professions, as well as other service providers who are great at what they do. But the taxes side, the bookkeeping, the finances side of their business is not their strongest point. So this is where we come in. So we are here to work with small businesses. What I hope for you from this workshop/webinar is I hope you take at least one thing from the 2 tax savings that I'm going to share with you today, and then actually implement it into your business. Because it's one thing to get all this information, but it's another when you actually implement it. That's when you actually see the real change. Okay. All right, quick poll time before we get started, because this is not going to be a lecture. This is not going to be a lecture. This is me talking to business owners. So please do engage with me so that I know you are getting the information that I'm putting through across. So I just want to know, and you can write this in the chats. Choose either A, B, or C. Who wants to pay taxes, right? Choose A, I don't want to pay taxes at all. We do have some of those people who are like that, who want to pay, want to hear nothing about taxes, want to pay no taxes. So just choose A if that's you. Choose B if you just want to pay a little bit of taxes, because you know that they do some good in this company. Well, they're intended to do very, very much good work within the company. So choose B if that's you. You know why we have to pay taxes and you're okay with paying just a bit of taxes. Choose C if you're a person who loves paying taxes. I can even pay for everyone else. You know, if that's you, then please share with us. Maybe we can share our numbers with you and you can pay our taxes. Okay, I'm looking at our chats. There's a lot of B's. There's only B's. Okay, so people are okay with paying just a little bit of taxes. That's always good to know. Okay. All right. Thanks for indulging me on that one. Okay. Okay. All right, just one other thing that I want to ask you, business owners on this webinar. Does anyone know where these places are? So I've just got pictures, 4 pictures of places that are somewhere within the world that I want to see if anybody knows where these places are. Trust me, there's a reason why I'm asking this question. If you've got any guesses, maybe these are places you've been to, places you wish you can go to. If you've got any idea or can take guesses of where these places are, just try your luck. Maybe you could get it right. Okay. Any idea, any guesses of where these places could be? Come on, guys. I know. Oh, there's Bali, there's Matla. Not quite. But good guesses. Okay. Cool. All right. So the places that I've shown you today are what's called tax havens, right? So what are tax havens? So tax havens, countries or places in the world that pay little to no taxes, meaning it's either their taxes are less than the normal tax rates within the world, or they pay no taxes. For example, they could pay no VAT. You know how in South Africa, we pay VAT at 15%? Some of these places pay 0 VAT, as in there's no VAT. Some of them pay no income taxes, right? So these are places that are called tax havens. Now, as you can see, there is no Table Mountain there. There's no Nelson Mandela Bridge, meaning that South Africa is not a tax haven, meaning that we pay taxes in South Africa. So I was glad to see that a lot of you in your responses when I asked that questions about how you feel about taxes, you indicated that you're okay with paying tax, but obviously only as much as you need to, because taxes are supposed to make do good within South Africa, be it in terms of building better roads, all those that it's supposed to do. If it does or doesn't do what it's supposed to do, that's another topic for discussion. But there's a reason why we are a country that pays taxes. It's to do good for the citizens of South Africa. Okay, so South Africa is not a tax haven and we do pay taxes. Okay, so I get a lot of these questions from business owners saying that they are paying too much taxes. Like, that's all they ever do. Whenever they make money, that's all they're required to do is to pay tax, tax, tax. So I just wanted to share with you that there are a lot of tax savings, tax breaks, tax cuts that are available for small businesses. What we are going to be covering over these 3-part webinar, the first 2 today is the Small Business Corporation, as well as the Employment Tax Incentive. We're going to be covering those 2. Next week, we're going to be talking about penalties, as well as the SDL mandatory grant, which is another way where you can reduce your tax bill. And then week 3, we'll be covering the VAT. We've left VAT for a little bit more time because there's a lot to cover there. But as you can see, there are so many other tax savings, tax breaks, tax cuts that are available, right? There's research and development tax cuts that are available. There's payments arrangements that can be made with SARS. There's so many. There's voluntary disclosure programs. There's learnerships. But the other thing that's important is with regards to hiring an accountant, because let's face it, accountants go to school, spend 3-4 years learning on how to help small businesses reduce their tax bill, and then they also get training on it. So ensuring that your business has an accountant that is also a tax practitioner can definitely help you in terms of your tax savings. Okay, so the first tax break that we're going to talk about is the one that's called the Small Business Corporation. What is this? Small Business Corporation is basically a tax cut that's available to small businesses. So I'll give you an example. In South Africa, if your company makes a profit, right, of, let's say, 100 Rand. I'm going to use very simple numbers that all of us are quite comfortable with. If your company made a profit, so this is your revenue less your costs, the profit that you make, the bottom line. If your company makes a profit of 100 Rand and you are a company, you are required to pay income tax at 27%, right? So meaning from that 100 Rand, you have to pay 27 Rand to SARS as part of the income tax. And then the balance is therefore the company profit. However, if your company qualifies as a small business corporation, you could pay no tax, meaning that on that 100 Rand profit that you make, if your company qualifies as a small business corporation, you pay no tax, whereas another company will be paying tax at 27%. Okay, let's go get into an example so you can see how this works. All right, you should be seeing an Excel spreadsheet. Okay, if you can't see that, please raise a hand so that I know there's an issue. But TSA, can see it. Okay, cool. So let's go into an example. Let's say your company made a profit of 70,000 Rand. A normal company in South Africa will pay tax at 27%, and the tax that they will pay on that profit of 70,000 Rand is 18,900 Rand. However, if your company qualifies as a small business corporation, you will pay no tax. So that's a tax saving of 18,900 Rand. Okay, let's go into an example. Let's say another example. Let's say your company made a profit of 400,000 Rand. This is the profit net. Your revenue less your costs, your profit. If your company made a profit of 400,000 Rand, any company in South Africa will pay tax at 27% on that 400,000 Rand, and that will amount to an income tax payable of 108,000. However, if your small business qualifies as a small business corporation, you will only have to pay tax of 26,198 on that profit. So that will result in a tax saving of 81,802. Another example, let's say it was a very profitable year and your organization made profit of 2 million, right? If you were a normal company in South Africa, you would have to pay income tax on that 2 million of 540,000. However, if your organization qualifies as a small business corporation, you only have to pay 449,198. So that's a tax saving of 90,802. So what can you do with this tax saving? You know, you could put it back into the organization in the form of investing in the organization via marketing your organization, investing in AdWords, Google, Google ads, Facebook ads, whatever it is that is gonna help you grow your business, or perhaps buying additional equipment that would help you grow your organization. So that's what you can do with the money that you're saving. So the next question is, how does a company qualify as a small corporation organization? Well, company will qualify if their revenue is less than 20 million. I'm just going to name a couple of the qualifying criteria. Their revenue is less than 20 million. All the shareholders are natural people, meaning that they are living people. So the shareholders can't also be other companies within that private company. So it has to be shareholders that are natural people. And then the company's revenue must not be made from 20% of investment income, meaning that you mustn't be your revenue mustn't be from investments, so interest from any investment that you're making or dividend. So that's just a few of the qualifying criteria. All right, I'm gonna stop there for a second and open up the floor for any questions that you might have, particularly with regards to this tax savings that we just mentioned on the small business corporation. If you've got any questions, please just raise your hand and then we'll just take 2 questions at the most. Okay, we've got a question from Lusani. Yes, go ahead.
Hi, good morning. Thank you for this webinar. It's really helpful. My question I wanted to find out, is this only applicable to the income tax and not the payee? Or is there such a provision also within the payee of employees as well as directors?
Okay,
Thanks.
great question. So this tax savings is specifically for the income tax, right? So it's based on the profit that your company has made, the tax that you would pay if you're a normal company, being 27%, but it would be less if you're a small corporation. So it's only with regards to the income tax. But stick around, the second tax savings is actually going to be addressing the employee's tax. How can you reduce your pay as you earn at the end of each month? So hang in there.
Thanks.
Cool. Boy Dumelo.
Hi, Premier.
Hi.
So I missed you said, what do we call this tax? I had a bit of load shedding, so.
No stress. This one is called the Small Business Corporation.
Okay, all right.
Yeah.
Thank you.
No worries. Just one more question.
Hello.
Sorry.
Hello.
Bonono, you can go ahead.
Okay. Hi, Pamela.
Yes.
Thank you for the webinar, by the way.
Thank
I just wanted to get some clarification on the qualification for your company to be classified as an SBC. You said in terms of investment revenue, it shouldn't surpass 20%. So your revenue, 20% of your revenue shouldn't be from investments, basically.
Yeah. So in the form of, let's say you have investment from, let's say you've invested money, like with the bank, 20% of your revenue shouldn't be from the interest from that investment, because it's not seen as running a business, if that makes sense. It's seen because it's just investment income, right? Or
Right.
dividend. Okay. Tess, can you mute anybody else who's not question? Okay. So I hope that makes sense. So it mustn't be from investment income. Your revenue, 20% of it mustn't be from investment income. Okay.
All right.
All right, cool. Thanks for those questions. I'll be moving on to the next tax incentive. Okay.